Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just got a couple of minutes past midday here, making it a couple of minutes past 1100 UTC. A really big shout out to everybody watching this live today, as well as everybody that watches this on recording. And a very happy Monday, 14th of July to everyone. We can see, as we're starting here on the 4-hour Bitcoin chart, and one of the big reasons that we're starting on this chart is the ideas and plans set out for members last night. I did share those plans on Twitter as well, which very, very simply is when price action is running incredibly hot like this, sometimes we get very limited opportunities to get involved. When that happens, one of the last places you want to get involved in the market is somewhere like this, right? Or somewhere like this, for example. Fine, this one did ultimately work out. You got away with it. When price runs really, really hot like that, you want to be looking for some form of consolidation or some form of retracement, whether that be down to an inefficiency like a gap or a prior area of consolidation, which has now, we assume become an area of demand. Okay, so we're going to take a look at some actionable plans today. We are going to run through Bitcoin, obviously the higher time frames as well, although it gives us slightly less information to go off because we've just seen such explosive days heading in, and we've had one of the largest weekly closes as well. So let's zoom out for a moment. We'll ignore this little bit of noise up here, but look at this weekly candle, right? It is an absolute beast of a candle. Yeah, this one was slightly bigger here, but akin to the same kind of size and volume of this, you can see it's a pretty nice candle, this one. So it just shows you that there's a lot of buying strength in this market at the moment. Whilst in truth, the equity markets are wobbling a tiny bit. I mean, I don't even know if I can really keep a straight face and call it a wobble, because obviously the NASDAQ, S&P 500, etc. have just been absolutely rocketing. We've started to see a little bit of the tariff fears and stuff start to wash through. We've got a busy week this week with PPI, CPI, unemployment coming through as well, which we will touch upon later. So we need to look at this because we're going to be decanting retail sales data as well. The week is going to be one of the first that people are looking to, the markets especially looking to this data to be where the tariff impact is really going to start taking hold on the figures. So if the market fails to really show any downside off of that, or any kind of significant downside off of that, then I think, the market is going to continue to be incredibly strong for risk assets. And while we might see that pause or that little bit that we're seeing at the moment in things like the NASDAQ and the S&P 500, crypto seems to be running hot. And when I say crypto, that's too broad a term. Bitcoin seems to be running really hot. We're obviously going to take a look at some others as well. So we're going to cover Bitcoin, Ethereum. We're going to look at Solana. We're going to look in a moment at the NASDAQ as well. We're going to look at the dollar index. We're going to look at our risk off and our risk on baskets, and we're going to just paint the picture for the week's ahead. Now, whenever I'm on a higher time frame, I specialize in intraday trading, right? So in day trading, I like to be in and out of positions in shortest period of time possible. But obviously I do position trade, I invest, I swing trade as well. whenever or whatever my higher time frame is for that concept, like if I was looking to swing trade, in truth, I'd be more focused on a weekly time frame being my higher time frame. And I'm just asking myself if we're bullish or bearish here. And I think it's quite easy to see that, you know, we're still super, super bullish here. Since we had the expansion beyond here, we broke out from this trend line resistance. We did so with high volume. We then broke out again. Yeah. So what we're looking for here is impulse, yeah, or expansion, consolidation, expansion again, and then we're looking for a form of consolidation again. Now, the issue that we have here, obviously, when you're setting new all-time highs, is, you know, there's nothing to target over here anymore. It's all completely clean air. So the rule typically, which most would agree with when you're trading new all-time highs, is that you trade it until it breaks. Yeah. So what we do is we lay out our conditions on the lower time frames. Explained here on the daily, this gap would have been the ideal scenario for price to come up, set this higher, confirm this gap, retracing to this gap, allow buyers to step back in here, confirm the strength of the trend and move higher. It would also allow us to come back into this former area of supply here, right? This area that was resistance, 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 resistance. Now with the strong move above it, obviously, as we can see on rising and high volume, we now really want to kind of see this area retested in some capacity. All right. It allows other buyers to get involved. It punishes people that were late longs. All right. It just gives the market an overall really good reset. Gibril Master, hello to you too, my friend. By the way, guys, if you do have any tickers you'd like me to chart, do let me know. We'll try and make time for it towards the end of the stream. And if we don't get time, then we will absolutely, I'll make sure that they get looked over on the Wednesday chart request show. So quite clearly what we can see here is if we got the retrace to here, you can find the reports that were shared with members. I also share a couple of time frames, normally the daily and the 4 hours, so they're more actionable for people on Twitter as well. So you can see that yesterday. The daily plan was really simple. If we get a retrace to here, then this is, you know, really, really good area to look for longs. If we really carve through this, yeah, and pay it very little or no respect at all, and close below it, then we want to see the prior all-time high here, yeah, and then obviously the previous one before that here, this kind of area hold, right? Then we can see if the buyers really want to kind of hold this level. Ultimately, Bitcoin holding above this level will show us that this is not a deviation, and price closing back within this area would basically be a large deviation, and then price returning to this range here. Now, what we can see as well is that we've had such aggressive move higher that we really haven't left ourselves many points of interest to get ourselves re-involved in the market here on the daily. So we've actually been focusing very heavily here on the 4 hour to set our conditions. Jojo, how you doing, my friend? Good to see you. So as we see this here, we got the nice breakout here as well. And look, if I'm looking for breakouts, I'm not a breakout trader. I've built breakout trading systems and worked and part of pods with breakout traders as well. And something that I've certainly always looked for, I've seen the best breakout traders look for on those breakouts is high volume. Yeah, and especially rising volume. Yeah, so you can see initial candle here, secondary candle here. This tells you a lot, right? Because the candles close as a doji, which shows a lot of indecision. So this means one of two things. When we have a large volume bar like this, it either means absorption, so all of that volume has gone into here and price has just kind of moved back down, or we then look to the follow-up candles to sustain that volume and look for this to be the explosive move higher. We got the latter. Price established itself above the prior all-time high at the time. Yeah, actually tagged the new all-time high as well. Then what I want you to notice here is this. We created this 4 hour gap, right? Bitcoin moves back down to here. And what you'll notice as well, how price has just been moving so incredibly cleanly in terms of, you know, this trend line liquidity, right? So what do I mean by that? Well, it's, you know, whether you're looking at it, I'll look at this in two ways. If I see sloped resistance like this, yeah, sloped resistance, so like trend line resistance, you look at that on the lower time frame, right? Then I'm looking for a couple of things, really. I'm seeing that as liquidity, meaning that when we return to this intraday, if we get our setups, including price action and volume, yeah, that shows us that sellers are stepping in here, then we can look for intraday scalps lower. I don't recommend that, not when you're in a strong uptrend. You're much better off waiting for the consolidation to stop, either waiting for price to violate this gap or area of demand, yeah, if that's what you're trading, and then to break down, rather than trying to guess that this is just going to break down from here, right? Ultimately, you want to stick with the trend, you want to stick with momentum, and that has been up for a while. So then what happens is the breakout candle that we get here that closes above the trend line reacts off of a bullish gap. We've got double confluence here, and we see we get a nice big bullish bar as well. Look at how small. So you have lessening sell volume. That is lower than that, that is lower than that, showing you that sellers here, they're trying to sell into this and they're getting exhausted. Then we get a beautiful big bullish pin bar or hammer candle here with volume, buy volume that's double what the previous sell and buy volume was. And then the confirmations confirmed with this breakout candle here, which was beautiful because it took us so far above the prior all-time high that, you know, it just showed an extreme amount of buying pressure settling in there. All right. So the reason I'm looking at that is we just overlaying the same thing as right life or trading in the markets are certainly difficult enough, right? So this example here, and look, when all you have is, let's say all you've got is this data here, you probably don't have enough touch points. But if you do, and then something like this happens, and this candle closes below and the trend line looks off, don't be afraid to move the trend line, right? You know, you want to ideally be getting a line of best fit. And I learned a lot of this many, many years ago from a guy called Tone Vase, who I still have a huge amount of respect for. He ran the Bloomberg desk. He's got an amazing, very much a Bitcoin max. He got this amazing show, hosts a lot of events all around the world. And just a really, really top guy. It was really, really helpful for me in my early stages. Anyway, one of the really key things I learned to him about trend line liquidity, support resistance, etc., is you really just want to be consistent with what you're doing. You'll see some people that only use the wicks. Yeah. So if I was only using the wicks here, then my trend line would be this with the information that I had up to this point. Absolutely legitimate. If we put our volume back on, what we can see here is actually price was really flat during this breakout anyway. Then we got the spike here, all right? Price ultimately running into this high. Is then when we got this nice close above this high here that we could take those safer positions higher. Now, what I tend to do with the data that I've got is I don't want to see the bodies violated, right? So whether I anchor to the wick or whether I anchor to the line of best fit, the key thing for me is I don't want to be actively drawing my lines through bodies, or I've got no rules to go by, right? So as I'm setting this line here, yeah, if I've got all of this data up to this point, then I'm saying, okay, well, actually, we go through this wick, we come very close to this one here, we have another touch point here, and let's say this was the last candle that we had. Then when we see price do this, we can be pretty confident as we look down here. We do have rising volume. It's not the big bar that we wanted, but it is coming up into here. NBA Hung Believe, how you doing, my friend? Good to see you as always. Mr. Brownbug, can you take a look at ETH, please? I certainly can, my friend, and thank you very much for the kind request. I will take a look for it straight after this. So, okay, BC, all well and good understanding what's happened, but what are we looking for now? That's the big question, right? So let's turn that off. Now, yesterday I said was really, really, really simple. What time was this posted? With the Bitcoin report yesterday was just that as long as this area holds, yeah. So whether you look at these areas as order blocks, whether you look at them as areas of demand, it doesn't really matter. It just means that there's buyers here, right? So as long as the buyers are here, price is consolidating above this. Ultimately, we're looking for these breakouts and for price to move higher. And then we're just playing this level by level. We want to see strength above these levels. You see this coming in, right? Look at what happens when price attacks these highs. Yeah. Really strong, big, high volume candle, but a rejection at a high. Remember, we want to overlay volume with price action. We want to find that added confluence, right? So, again, remember what I said before. You see a big volume bar like this, and then you see a pretty strong rejection candle. Well, telling us one or two things. Buyers were incredibly strong here, but ultimately got pushed back by the sellers below this level. So then we wait for more confirmation. All right. So then that happens. Then remember what I said, we want to look for the second candle. Do we see a rejection candle here? Do we see bearish volume? No, we see lower buying volume. So we have to remain patient. Slightly higher but buying volume here. But this actually tells us a lot because this candle wicks lower. So sellers really try to push this candle down, right? Buyers pushed it all the way back and ultimately we've closed above. What does that mean? Well, it means as a trader, I have fixed risk because I don't expect price to come back down and take out this low. Yeah. If this is the liquidity sweep, and by the way, this moved into this bullish gap here. Yeah, let me just draw that in for you guys so it's really nice and clear. I'm just doing it in green so it stands out a bit more, all right? Price moved down into this bullish gap. That's absorption. You just look at the candle there, yeah? That's buyers stepping in. It's pushed it back above this level where the sellers are. So what are you going to do now if you're short this market? At this point, you've got a lot of indications that you're probably wrong trying to short here. So it allows you to close out of that position and flip your bias. And that's often when we see these large aggressive expansions, right? So as we're kind of moving it up to here, right, look, even because we don't know exactly where this is heading, you can use Fibonacci extensions, etc., for targeting, right, standard deviations. But, even if you're just saying to yourself, you know what, let's run this to 2R or whatever, 1.5R, whatever your risk tolerance is, then I'm going to move my stops up here, because if we come back to this level, I'm happy to get stopped out here because I'll re-enter. Yeah, you made a bit of profit, you've taken it off, or even if you get stopped at entry, even if you're wrong here and price comes back, as long as we hold this area, it's probably going to give us good opportunities to go long. If we start scything through, and one slight concern I have today is the uncertainty working its way into the equity markets, all right, which we're seeing a little bit in the weakness in the indexes to the latter part of last week and the beginning part of this, which we're going to look at in a moment as well. And yeah, sure, we can look at some oil for you. What ticker do you want looked at, Jojo? Because I'm normally just using CL1, right? Crude oil futures. But let me know if there's a different ticker you want me to use. And yeah, of course, we'll make some time for that as well at the end of the show. So where are we at the moment? Well, quite simply, if we look at what we've just covered, and there is a reason I go through all of this, right? Because I like to do it on Monday. We have new people coming to the show, other people as well. It's good to just run over so you guys are completely aware of what my concepts are and what I'm looking for. Ultimately, if we're bullish, I'm looking for bullish trades, but I'm looking for areas to get involved in those trades, breakouts of key areas, retests of areas of demand or order blocks. I'm looking for consolidations, and then for price to break out, then looking for retests of gaps. Perfect, Jojo. We'll take a look at that one. Yeah, like this. So from here, I don't want to just ape into this, right? Because just think about it this way. This last point, and then we're going to crack on, all right? But let's imagine this move here. Let's imagine you waited for the breakout at this level and you go, right, okay, now I know where I'm wrong. There's the low. Yeah, close below that low, trading this higher. Great. Okay, nice trade. Now let's imagine you waited for FOMO to grab you instead of trading the system and you entered after the close of this candle. Well, as price sits into this consolidation here and doesn't look like it's going anywhere, you're 0.5R to the good with a huge exposure to the downside and not really entirely sure how far. And this is where people kind of panic, cover, get out of the position, and then you see that pop. Even if price really did pop from there, as it sits at the moment, you're only 1R up, right? You're only 1.3 to the very highs. This is where risk management, and position management is so very important, right? However, if you just waited for price to consolidate here and you overlay the same principles and you say, okay, well, I'm going to wait for the breakout, remember, as we did before, just look how much more you can control these trades. You can get more out of the market, and ultimately the very best traders do that. The great Larry Williams, multiple Robbins Cup winner, and I believe still holds the record for the largest win by percentage in the Robbins Cup as well. Once famously said, was being interviewed, and somebody said to them, you must be a once-in-a-generation trader. You must be exceptional. You must be one of the greatest traders that ever lived. And he said, no, he sounds surrounded by much better traders than me. He said, I'm a very average trader. He said, but I am an exceptional risk and money manager, right? Always remember that. So many people in this game can make money, but give it back all too quickly, okay? So considering our principles here that we want to be taking trades from key levels, well, what am I going to be looking for now that the plan below has already come to fruition? I'm looking for this area here and this area here, right? Price broke out of this consolidation. Yeah, we had this down close candle here or this bearish candle here. Buyers stepped in, we broke out, we retested this area and saw a strong move away. So I would be looking for strong retests of that area there to move away. and definitely Peter Brand too as well. Yeah, exactly. Never really studied much from Peter, but you got to respect the OGs in the space, right? But yeah, I would imagine to get where he is in life, Peter's probably not the worst money manager either. So as we look at this here, quite simply on Bitcoin at the moment, sorry, that should be an H4, not a daily. I'm looking for price to retrace to here, yeah. And then as long as I'm happy with what's going on with risk in the market, and look, we are getting this slight decoupling at the moment because we can see, equity markets here, the focus is on the NASDAQ, the S&P 500, and the Dow Jones. These are just their futures contracts, all right? And look, these are all down just shy of 0.4% today, 0.40%. So what does that tell us? Well, it tells us that the risk bid is started the week a little bit weak. Sorry for the kind of double use there, but we've also come into it off of a weak close of last week, right? Looking here at our risk off basket, gold's doing pretty well. Dollar's down a little bit, but it's flat on the DXY. The volatility index, the VIX, is quite heightened today, which makes sense. Started the week with volatility, remember, pre-market opened last night for the NASDAQ and stuff like that. So it's catching up on what's been happening with crypto, positioning, making allowances for new news events and stuff. But the other one here is the risk-off currency pairs that I look at. I look at the Aussie JPY and New Zealand JPY. Yes, that's the Aussie and New Zealand dollar versus the yen. The reason for that is the yen's considered a safe haven currency, and the Aussie and New Zealand dollars are high yielding currencies, meaning they're higher risk currency. They're also very tied, especially the Aussie, to commodity markets, right? So looking at this here is kind of telling me, all right, the risk off baskets are down here. Risk on baskets is down. Risk off baskets are doing quite well. Equities are coming back a little bit. So the market hasn't quite woken up with a great risk appetite at the moment, but we're over an hour away from the pre-market open over in New York, which we're going to really see. And then, 2 hours away from the actual market open. So I think we'll see some real kind of volatility come in today. So for me, this is the clearest plan. I want to see price come back down. If I can't get in down here, I'm not going to chase it up here. I want price to come back down to this area here or to here. I would need to see price closing below this area of demand, this order block here. Bearing in mind that this low hasn't been swept either. So I'm really not ruling out a fast move for something like this. I mean, it would be even better if we recovered it quickly enough on the 4 hour here to see something like this, to see a very aggressive flush, in the next 4 hour candle. Yeah, I think this one will probably be a little bit benign, but then see a really big flush, induce a lot of shorts, recover these key levels. Ultimately, as long as we hold this, I don't care if we wick down to here or not. As soon as we get back above this low, I'm looking to position myself long again. All right. So Jojo, I think the dollar can also consolidate and go higher due to shorts. Yeah, exactly. So we're going to take a quick look at that. One thing just before we flick over onto that I just want to cover with you guys is very, very quickly to just familiarize yourselves with the news that we have coming up this week. Okay, focus obviously the US market. It's the biggest market, affects more markets than anywhere in the world. We got core CPI month on month, CPI month on month, and CPI year on year. We also have the Empire States Manufacturing Index tomorrow. So busy day Tuesday, right? Wednesday, we can see we have core PPI month on month and PPI month on month. Again, real key drivers, looking to see how the tariffs and how everything that's going on geopolitically, economically, is now filtering through into the consumer, all right? And not just that, into production as well. Now we're looking down here to Thursday. We've got core retail sales, unemployment claims as well. We also have the Philly Fed Manufacturing Index and FOMC member Waller speaking. We then got preliminary UOM consumer sentiment and inflation expectations. So we have got a busy week full of news, right? And full of catalysts that can affect the market. So do be aware of those, right? Now, I'm not saying plug in every news event, every minute some new bit of news is dropped, get out of your positions. Just remember that at the moment, the markets are reacting on the fact that there's room for growth in the US, that they're not seeing massive impacts to growth. GDP is relatively stable. They've got a relatively soft labor market still as well, right? So basically means that we've got this room to keep pushing equities higher. Trump is also is increasing his attacks on Jerome Powell, who's the chair of the Federal Reserve, to try and get him to I read about a 300 basis point cut. Now, just put in your mind that the biggest ever in history in the US was 100, and that was for COVID, and again before that as well, I think possibly the dot-com burst or something like that anyway. But it's a very extreme thing to do. 3x that, I don't think is going to happen. But we also need to remember Powell ends his term next May, and there's a lot of talk of Trump trying to get Bessent into that role or trying to get someone that he wants in there. And if he gets that, they're going to put the money printers on aggressively and go after this. 2026, they have to, between now and then, refactor a lot of debt. Okay, the US. So that means that they're going to want bond yields down, and they're going to want to be buying a lot of that debt back, and they want to sell a lot of that debt as well, right? But they need to do it in a way that ultimately doesn't cost them too greatly, because their GDP to debt ratio, I think, is running, or debt to GDP is about 128%. All right, which is pretty dangerous territory. But Trump is not afraid to push these markets incredibly hard and a lot higher. All right, so we need some real key news catalysts, I think, to take the wheels off of this. But markets live and breathe, right? Although the price action that's on the screen at the moment might not make you think that, because it's such up only. But this is a 4 hour, right? Expansion, the market takes a breather, consolidates. This is the decision making of whether price is considered fair value here. If it is, price rips higher. Is it considered fair value here? It is up at 118k. Now it's ripped higher into the early 120s. The next question is now being asked about whether Bitcoin is considered value at 120. If it's not, it will reject and it will find an area of fair value lower. That's why we look at the gaps and the consolidations. All right. And Jojo, yeah, there's rumors around Powell resigning in yesterday's news. Yeah, I think, look, the poor bastard I think he's done a really good job with the Federal Reserve, to be honest. I think when you look at the curbing of inflation, Americans really didn't suffer that badly, certainly no more than other places in the world with rising costs. I think he's brought stability back. He's got inflation under control. Interest rates are back down. The big risk is if he listens to Trump and Trump really bangs the money printers on and cuts interest rates, it's just going to send inflation soaring. And that's a much bigger problem, right? You know, you drive the US into a recession then, and it would be a nuclear winter of a recession. All right. So, yeah, I don't think so. I think he's got every right to go out with his head held high, but it still must be a really shitty position to be in, to have, you know, the president of the United States coming out and calling you incompetent and telling you you're holding the whole country back, when in fact he's probably done the opposite. Probably saved the US in a lot of respects from idiots like, you know, or idiotic policies like Trump has brought in at stages, right? But either way, Trump's good for the market. That's why we like him. He's a horrendous human being, I'd imagine, on almost every level. And the planet and people will no doubt suffer for his tenure. But, you know, from a market perspective and taking politics out of it, it's hard to not see these rallies continuing. Just going to quickly flip over here onto the NASDAQ as well, right? So just clear some of this up. The reason for this is we can see a bit of a different kind of picture here on the NASDAQ, right? Prices come up. We can see these large expansions. Yeah, this one particularly was very, very, very aggressive. Then price corrects down here. Then the expansion gets a bit less, and you start to see the momentum coming out of this, right? You can start to see the volume dropping off. Now, when I'm looking across the board of this, I'm saying to myself, okay, well, price is basically in a consolidation here, and it makes sense, yeah? Now, the reason that it makes sense is because when we look at the news we've got coming up this week, when we look at the effects of what last week had as well, everything's just a little bit flat. Mega, you're very welcome, mate. So if I'm looking here and I'm saying, well, what's really capping this as such? It's kind of this gap into this kind of order block area around here, this kind of area of demand down here. So this has provided good buying opportunities. Let's see if this area does the same here. Any good progress here, I think, on the NASDAQ, the S&P 500, etc., will only cement how well Bitcoin will do. And then ultimately, we're looking for that to cycle into alts. So let's take a look, and we're going to flip now onto Bitcoin dominance. So despite Bitcoin's epic rallies at the moment, we can see dominance coming down. This has got a lot of people excited about alt season. By the way, Jojo, just saw your comment there about the 30-year yield. Yeah, absolutely. Just to put in that to context for people, you know, the 30-year treasury or bond is, you know, they're selling that debt to people and they're paying them. The yield is what people get paid in interest, right? Now, if you look down here at our bonds, or yields anyway, the treasuries, The 2, the 10, and the 30. Now, what you'll notice is the 2-year is paying you at 3.89% interest. The 30 is paying you 4.9% interest over inflation. That's a decent return. So why are they having to encourage people? Yeah, think of it like this: you've got to pay a higher yield to allow people to take the risk. So what they're saying is the US in 30 years is a much bigger risk of default or those bonds not paying off than it is within 2 years, which makes sense. And the reason for that is they're kicking everything down the road. Yeah. They're not dealing with that. They're not getting the GDP level where they want it to. They're not getting the debt to GDP level anywhere near where they want it to. In fact, they're increasing it substantially. You know, they're looking at the big, beautiful bill will kind of add, I believe, about $3.3 trillion to what's already debt that's in the tens of trillions for the US, right? So that's something to worry about. By the way, there's a really interesting website called the US Debt Clock. If you have a moment, go and check it out. It gives you all the live, real-time data of the US stock market. Yep. Sorry, of the US debt. And let's see if I can find you one to share just quickly for a bit of fun. But anyway, just to finish on Bitcoin dominance, we can see falling down, coming to like a little bit of support here. You can see from the downside wicks, but then getting eaten up quite aggressively at the moment. So we really want to see that down. But let's not forget, your real kind of altcoin purists, if you're looking at this in a historical sense, are looking for this to be down around about 50% or lower. So just an interesting kind of bar to put that down at. So let me just show you this just for a bit of fun quickly. You can go onto this usdebtclock.org, right? This tells you what their national debt is running at. It also tells you the average debt per person, what the price of buying a house was. Let me find that because that's such an interesting point, actually. I think it was in 2000. Yes. Yeah, it was. That's right. So if we look at this down here, this section, I don't know if you can see this, right? But the median income in 2000, so 25 years ago, it was $31,800. The median income now is $43,900. So not the greatest increase, is it? What, maybe like 30%, 25%, something like that. However, look at the cost of a new home. New home in 2000 was an average of $165,000. It's now $409,000. So if the income's gone up 30%, yeah, then house prices have gone up like 2.5x, so 250. 250% rise on house prices, 30% rise in wages. That's a problem. Average car in 2000 was 22K, it's now 48. So that's gone up twofold. Yeah. It's very, very easy to see how the costs are getting passed on to people, why people have so much less money in their pocket, while the cost of everything is going up considerably. But this is the real key thing here. US national debt is currently running at $37 trillion. All right. And the US federal budget deficit is at 2 trillion. So this is a really, really big issue. Also, if you look to the debt to GDP sitting at like 128%, just a very interesting thing to keep an eye on. Now, this isn't fear mongering or scare tactics. This is just a very, very interesting thing to look at. Look, the US has a lot of hidden wealth. Yeah. So the asset-backed dollar, precious metal reserves, minerals, real estate, land, stock market, recaptured assets. Total hidden wealth in the hundreds of trillions, right? Wealth per citizen's over $500,000, for example, where debt per citizen is 108,000. So when we look at it, it just shows you that these costs are ramping up quite a lot. The fear for the people, the general public, especially, that those costs end up getting passed on to them. But if you do want to analyze that data any further, I always find that a really interesting thing to look at. So we're going to finish up the show now. We've got about 25 minutes. Just for fun, I looked at RRPNSD and WTO tickets for Fed wallets if money printer is on or off. That's not a bad shout, actually, just to see how they're acting. I mean, one of the things you can look for as well is how aggressively Nancy Pelosi, if you can find access to that, is positioning into risk assets and that, because she's probably the biggest insider trader of all time, I would think. Returns like 300% what the best funds do every year, but she's just basically investing in bills that she's got information for, which is incredibly corrupt. But it's the US, isn't it? So we can get off of this now. We're looking at Bitcoin dominance coming down. So let's take a look at Ethereum. I know we've had a few people ask us about this, right? ETH is a really interesting one. And what I want to do here, actually, we use our other one, don't we? Go back onto our other chart here. the one we use from the live shows, right? So again, we had the key points. I'm going to get rid of this now. This was just the 50% Fibonacci retracement of this leg. It's what we targeted when we got this nice bullish reaction down here at this high time frame gap. But that can come off the charts now. The yellow box here just represents the golden pocket of that same Fibonacci retracement. So again, 50% first, and then into here. We got this slight rejection, but we didn't flip bearish here for a few different reasons. One, we set the conditions of this gap. There's a daily gap in here, move price higher. This daily gap, we're looking to do the same. If we come down and closed below these bullish candles here, then I would have fully expected this gap and this low to be retested, but we didn't. So we retained a bullish bias. For anybody that was part of the live show, I think last week, when we were discussing this and saying that I'm now not considering this orange box, or golden box, it's supposed to be because it represents the Fibonacci golden pocket, to be resistance anymore. We said we would leave it on here for one more week, but then we delete it. Why don't we expect it to be resistance anymore? Because if sellers were going to step in, sellers normally step in the first time that price enters here. There's no reason for weak selling here and then for strength to be shown again and then for people to short it, especially if you don't get some kind of swing failure. So we've been prepared for the upside, and then we were just monitoring the levels. The reason we got these drawn in, this was a key high. Price closed above it. What do we then look for? Well, if that's the last swing high before the breakout, we look for that to be retested and price to move higher. We then moved our attention to this, and this ultimately price just melted through both of them. So now they can come off as well, because they now no longer have significance. So what's the playbook? Well, the playbook's exactly the same as it was for Bitcoin, except we have got some other targeting to consider. We had this daily gap here, which has supported price. So ultimately, we're still bullish. We do need to factor in this high. All right. Close above this. Again, look for this area to be retested. If we break down below this, then we look for this to be retested, right? It's a very small area of demand or order block, but it is one no less. So let's just squidge the chart up a little bit here and see what we're looking at. In fact, let's just move to a weekly very quickly, because we can see here, let's just clear this up, that we're finally re-engaging with this bearish gap. Now, what I try not to do too much, if we've got bullish structure, which we've got here, yeah, then I don't want to worry too much about what's on this, like the sell side of the curve, if you like, right? But we still need to be respectful of it, because we know there's liquidity resting in these key levels. For example, these relative equal highs here, which rejected price. We've now seen a strong close above this level, meaning this could be a level of interest for us to retest. But we are within this gap now, and something else that's definitely got my interest is this, right? Now, this is a weekly order block or area of supply. When we moved up here, this is where the buyer stepped in. We closed below this here, confirming this as supply. We retested it here. Sellers stepped in. We had this large move to the downside. Now, the reason that I'm interested in this here, as well as the area above it, is this for me was the origin of a pretty important move. Price was bullish here. We came back into this level. We set this low. The expectation was that price would move up from here and continue its bullish price action, but ultimately it broke down. So there's definitely an area of keen interest within this. So that for me is my current upside target here. Now, in terms of concerns, for want of a better term, about this gap, now we can do a lot of things in this gap, and it's a very large area. So what I'm more interested in is just seeing how price kind of moves through it. The fact that we've come and had a pretty large part of the body close within here already, and minimal downside to this wick, yeah, so the wick only got pushed back like this, tells me there's probably not the strongest selling in the world taking place there, all right? So that's what I want to be aware of. So while we're in here, I'm not really worried about the downside in that respect. I'd much rather monitor and make sure that we're holding the key upside levels, and then be reactive if we do start to breach some of those. Excuse me. So we can see here we've got the Ethereum breakout above this high. We now want to see this hold on a daily scale. To get a little bit more granular, I'm going to use the 4 hour here, right? I'm also just going to, yeah, it's okay. That is locked. Otherwise, we'll move that around. So now I'm looking at this. Let's look at the conditions again, right? So if I want to get long here, by the way, this looks like a really lovely close above here, by the way. Price came in, rejected literally to the cent here. Came back up again, yeah. Now look what happened. Price came into this, open, drew down, came above, and then closed above the level. Came back in, drew down. Now he's moving up. So this actually looks like quite a good retest of this area here. So we could see further progress here from ETH, especially if equity markets behave. The next kind of area that I would look at here is where the buyers were prominent previously, or where people tried but failed to short this. Yeah. So people trying to sell into this here. We don't get the volume on this one, do we? Sorry, but you would see this falling sell volume here, and then obviously buyers stepping back in. So it's a difficult one, right? I think we've kind of had this retest now this morning. I really want to see how the market reacts when we get the open. So we've got pre-market open in New York in about 50 minutes from now. And then, an hour after that, we're looking at the actual market open. That, for me, is the key data for the day, because if we got a really aggressive flush and crypto starts to realign itself with equity markets, if they're moving in that direction, obviously, especially the indexes, the technology-heavy ones, the S&P 500, the NASDAQ, then I think that could be a lot for crypto to fight against, especially after so much upside last week. So we want to be wary of that. However, if we start to see the equity market set off and we start to see crypto hold or show strength here, then I think that's really bullish. And if the equity markets do pick up and they're really kind of on the bid today, then we really could see these things start to fly off. So we need to be a little bit reactive off the back of that. Best case scenario would be, for me, kind of a pullback to this area here, followed by a quick recovery of this, and then do that in something that doesn't look that ridiculous. So pull back to this area here, quick recovery of this, and then any dips are massively for buying. If we hold above this level here, then same principles. I would still look for a large expansion and price to be pulling back to either a newly formed gap or an order block level, so that we can look and have, a little bit more context when we're buying in. Mr. Brownbug, you're very, very welcome, mate. Thank you for the comments. So that's where we are with ETH. Let's just take a look at Sol. One moment. Here we are. Right, so zoom out a little. Oh, sorry, guys. Can you hear me? I think there was a little bit of a glitch then. Thank you, Nero, for the heads up. Let me just whip back on that for a second, because I think we've lost sound. That should be back on now. I can see my monitors, actually, see the lights flickering back up. Let me know if you can hear me all right, guys, and I will continue my ramblings. Must have been nice and peaceful there for you all for a moment. Sorry, because there is a little bit of a delay. Yeah, a few people say they lost the sound. Just making sure it's back on now. Okay, brilliant. Thanks, guys. And thanks for the heads up, Nero, Mr. Brownbug. Appreciate it. So this area is key for me. Why was this area so key? Look, you can't just, if you're in a trend, or say, for example, you break trend here, why are you got a higher low? Let me just show you this, right? So this is your market structure break. Why? Because you've got higher low, higher high, higher low. Yeah, you're very, very comfortable in breaking market structure here. So as we look at this, yeah, thanks, guys. Sorry, I know there's a delay on the comments coming in. As we're looking at this here, when we're in structure, I'm just kind of saying, well, I just want to now see the bearish candles be respected here, right? When I stop seeing those candles respected, and I would need a close below all of these bullish ones, right? Then I want to see the gaps held until basically price goes the other way, and price goes the other way over here. Yeah, large up close candle, price takes liquidity, and we sell off, right? So we've basically got a reverse situation of that where we are here. One thing that I absolutely love to see when a new order block or area of demand or supply is set is for price to have swept liquidity. We can see here we have a local sweep as well as the sweep from back here, leaving us relative equal lows as well. Then when price closes above the bodies of these candles, then this for me becomes a key area of interest, right? This is where the sellers were trapped off sides when price revisits this areas. If they hold through all of that drawdown, that's where they can mitigate and jump back on board with a trend that they now assume is to the upside. But it also shows us that this is the area that the breakout came from. So retest of this area, if strong buyers were here before, then buyers with the same conviction are quite likely to be there again. So as we get this here, unless we start clawing through this, so if we got another, so let's say, for example, we got another candle close quite deep into this and we disrespected the 50% of those bodies, then I would look at this and say, okay, well, this is probably going to be the target, all right? However, we didn't get that. Price very quickly recovered this here. So again, we're looking higher on Solana for those reasons. We are coming up to an area that we highlighted last week. If we zoom in on this. Thank you, Norbert. Yeah, sorry, mate. I know a lot of these are coming through into the chat later. I think we've got a big delay on the chat today, but apologies for that. It was just a little technical error. It disconnected the microphone, but hopefully you guys should all be back up and running now. So as we look at this here, this is the area we're looking for. Initially, was a little bit half, 6 of one, half a dozen the other, as we would say, looking for the second confirmation candle. We got that confirmation candle. It came in with big volume. So now we're targeting these highs. We haven't quite got there until this week, because what the eagle-eyed amongst you will notice is this stopped just shy of this. The reason we were looking at this as such a key upside target is they are equal highs or relative equal highs. Now we have taken those out, right? This is where we need to drop to a lower time frame again and really start to kind of build out our play. So now we're here on the daily, we can see the structure that we were looking for. So we engaged with this, yeah. We had this beautiful weekly area of demand, yeah, or order block. Price, long downside wick. We saw volume step in, large expansion created the bullish gap. So just as we've been covering on the previous time frames, thank you, Norbert, we can see here that this gives us our conditions. Hold this, look to long. Close below it, look to short. Yeah, simple. Again, this is where we create a new area of demand. Order block closed above. Price can't even get a body below this area, and we create a bullish gap. There's no reason for anyone to be shorting in here until we close below this area. That's what we need to be aware of. The market is very good at just chopping around sideways and driving people nuts. So then we step into this area here, and we've had the expansion. So if we're looking under the same principles now, this becomes the next key order block here on a daily scale. And we want to see this daily close here. Now, in an absolutely ideal world, I would love to see price close above these equal highs. If we do, I would also look for retests of the equal highs to go long, as well as retests of the order block here. Now, something that is remiss of me to have left off the screen here because it's shown such importance is this. Right? Another daily gap. So look what's happening. We're getting expansions, corrections into daily gaps, expansions confirming areas of demand or order blocks before price cools off again, holds the gaps. As long as the gaps hold, we stay patient, we wait for our long triggers, all right? Then again, we get the breakout. Now, what have we got again? Price has reacted at a bullish gap and it's now looking to set the order block. As long as we maintain that process, that's what we're looking for price to keep grinding higher. If we close below this here, we need to be a bit cautious because we've got another gap down here as well. But look, we can't realistically be doing anything other than being bullish at the moment. It just doesn't make any sense, right? There's no point trying to enforce our will on the market. Look at what the market's telling us and then react accordingly, right? So if I want to break this down further, I've got my H4 gap here, which now becomes my conditions. I can start to see some rejections forming at these highs. Makes sense. Yeah, good idea and a good place to take profit. And also a good place to track breakout traders and other people to get that liquidity and send the market the other way. Ultimately, the order block level at 164.36, as well as the 4-hour gap sat basically, that splits through the middle of it, is a perfect area I'm going to be looking to hold for the day. All right, so that's where I am on Solana. Now we're going to take a quick look at oil for our friend Jojo as well. So I think I should have a clean chart on this actually, because I cleaned everything up. Nice. Now, the key thing with oil here is oil is a massive player in the inflation game, and something that people expected or still expect Iran to weaponize against the US and the West in general, because they can cut the amount of oil being produced. Obviously, so can the oil producing countries, and they can do that in their collective, right? And you look at OPEC and stuff like that. But if they do, then driving the price of oil up would massively affect inflation in the United States and the rest of the world, right? So they can also, Iran could technically weaponize the Strait of Hormuz, which would then affect oil and also affect transportation, etc. So that's why there's a little bit of an extra eye on oil at the moment. Now, the key thing here is that it's remained really, really stable, but we did see some pretty aggressive upside several weeks ago, right? And then we've seen that kind of big sell-off. I think basically this was maybe kind of reaction here in the markets to the idea that those things could happen, that the oil-producing countries could, lessen the amount of oil they produce, therefore driving the price of oil up. People were talking about over $100 or $120 a barrel becomes a really, really big problem for the United States. Obviously, last time we were teasing around those levels, the mid to high 90s. That was back here in September 23, right? But there is precedent for it. We can see if we go back here. So that's what people want to be cautious by. Now, looking at this from a technical standpoint and not getting too carried away with the news, although if we look at the key news drivers here, you can see the idea today is that stocks are slipping as US tariff heats up. Oil gains further with Brent above $71 a barrel. Again, this can be seen as a little bit of a risk off, or a risk hedge as well, right, with oil. But from a technical perspective, it's starting to look quite good here. We've had a large expansion here. We've had a nice retrace now. Price is showing that it's quite comfortable holding these levels. We're starting to see increased buyer volume come in. I think, obviously, I know this is a weekly chart, but if we start to see that continuation up, prices are going to drive up. And that's not the most risk-friendly thing as well, but we do need to obviously, be careful how we're analyzing that. Now, as we look at the chart here, we can see how flat it was through here. It's a typical period of indecision or consolidation after a large sell-off, but this doesn't strike me as something that's overly weak. Now, again, just to go back to my poor analogies, which everybody probably either loves or hates, but when we're looking at this here, we think about the hot water principle: 2 pans of water, one full of boiling water, one full of tepid water, cool water. You're blindfolded, you put your hand in each. You can keep your hand in the tepid one as long as you want, like this. Put your hand in the tepid one. That's okay. I'll keep my hand there for a while. Means you can push your hand a bit deeper if you want. No problem. Yeah, that's what we apply to gaps. So if price continues to probe the gap here, chances are there's not a lot of selling power there. When we close above it, we then look for that to be violated and for price to move higher. Same theory with highs and lows, right? So this high, what happened, right? Price came into this level. Was the water tepid or was it boiling? It was boiling, because look, it barely touched it and you had to pull your hand out as quickly as you can, right? That then shows you there's a much higher likelihood that price is then looking for the next liquidity pools, which it found below these lows and within this bullish gap here. So we know where to target. So with price doing the same thing here, working into this gap, the next kind of conversation comes in around this gap here. Yeah. And look how price is just kind of easing its way in. Is the water really boiling hot there? Not really. Pulls back a little bit. Maybe it's a little bit warmer than normal, but as it becomes cooler, price is allowing itself to gain more territory within there. And typically when you see big moves in the market from any level, example one, example, in fact, just example, right? Look what happened. Price dives to the level and quickly moves away. Price comes into the level, quickly moves away. This is what we hear as the V-shaped recovery, all right? Now, versus price coming into a gap or a high or a low where it doesn't move away very quickly. Here's another example. What happens? Price comes into things, shifts off very quickly, closes here. Where's the next liquidity? Here. So as intraday traders, we know that's our grace, that we can take the trade from here down to here. We don't know it, but that's what our assumption is. We then look how price reacts at this level. Can price get back down below that level? No. Look at the absorption. Then we see the breakout, right? So then how does price react at this high? Initial reaction, but see what I mean? Price is kind of spending a bit of time there. The likelihood of this thing closing above and retesting become higher. What does price do at this level? Yeah, breaks out above it, pays it no attention at all, and just moves away. So the water isn't boiling here. It's not causing a rejection. It's tepid enough to allow you to stay there, right? And that then often means continuation. That's what I'm looking at here on crude oil, to be honest. I think, look, if we're looking at this in terms of structure as well, we closed above these, sat our order block, price moved away. Perfect close, perfect retest, price moved away. What did we do here? Similar scenario, right? We get the close above, the retest. Yeah, price dipped a little bit here, but did it come back towards this? Didn't come back in. Just about held the 50%, maybe a little bit lower. But then this expansion here tells you everything, because then we've set the new area of demand. All right, and we haven't retested this yet. But ultimately, everything is kind of building structure into this level. Thank you, Nero. I have the pleasure of working with members over at the Bird Nest. So if there's anybody that wants to put up with this on a more regular basis, as well as all of our other talented traders and calls and educational bits and pieces, you can find information down in the description, guys. But I do appreciate that. So this is where we are. Crude's holding this area, actually looking quite strong at the moment. Difficult to be long here just from a technical perspective on the daily, because we are within this large gap. But the fact we continue to draw strength within there makes me feel like this thing's moving higher. However, I wouldn't openly be taking long positions with inside a bearish gap, right? Technical or otherwise. So I would want to see this play out. If this gets violated and closed above, I think crude could move a lot higher. And I think that's going to put a little bit of a shock into the market. But ultimately, if we start to break down from here, and let's say, for example, we closed below the low of this candle, which I'll just do in red for when we come back to the chart next time, then I would expect these lows to be attacked. And then the whole host of liquidity that sits down below here. All right. So unless anybody has any other tickers, I'm just trying to see if there's anything of note that we went through last week. Actually, it might be worthwhile looking at SUI, because we did cover this last week for members. Just give you the thought process here. Zooming out to a weekly, we see the lovely recovery, that sweeping bottom there that led to that high expansion here. We've got beautiful, look at the volume that came in here. Yeah, the bright green candles, or the bright pink ones here, represent 3.5 times the average volume going in on this. This isn't my indicator. I don't have any association with it, but just out of respect for the clever person that made it, this is volume sweep by Leviathan. I had a few people ask me that recently. I turn off these top ones, but you can look at the threshold changes, 1.5, 2.5. I leave it to 3.5 because I'm either looking for these pushes up to lead before we have these corrective moves. Yeah. So for example, here, really, yeah, of course it can, mate. By all means, Nero, we'll take a look at that. Price really moving up through here. Yeah. See this line. Then we see when we get the bright green spikes, they often precede the corrective move. Same with this. Yeah. Price had just an aggressive sell-off. This seller's really battered into this here correction, and then we get the reversal, right? But ultimately, we got that nice drive above. Now, again, really, really simply, it's that simple here with SUI, SUI simplicity, right? We've got that. we got this. These were really, really key levels for me, and they still are. This was a really key pivot, resistance, initial resistance, reclaim, holds the area, lots of buying. Retest, decent reaction. Second retest, holds the area, big reaction higher. This is kind of an interesting one here because we had resistance here, close above, held this as support, broke down below, retested it as resistance, and it's held as resistance since. So on SUI, if I really want to see this thing starting to moon from this point, like I said, longs were favored from down here. We had the Fibonacci move. We just about held the golden pocket. We were just a little bit underneath it here. Right, but held the 786 beautifully. And then look at this, how we get that really nice move up here. So everything kind of doing its job at the moment, right? The only thing I'm concerned about is this area here. If I move us to the daily again, we got a little bit more info. Yeah, and we can see again what happened. Price comes and gets back above here. Now, when it commits, it gets back above, holds this gap, support all through here, loses it, retest, sell off, retest, sell off, retest, sell off. Small deviation, but remember on the weekly scale, we never got a close above it. Look at the upside wicks, price selling off. So now we're smashing back into this area. I'd probably highlight these wicks here, which we're just going to do in red, so that when we look at this next time, you know, this is where the sellers stepped in. If we don't see absorption here and sellers looking to reject this again, if we get a strong close above, this is the area we look to hold and ultimately push up. Gibraltar, yeah, sure, mate. Let's take a quick look. So we'll close out on that. We'll close in on Rheinmetall and Algo. Let's have a look at Rheinmetall. Do you know what the ticker is, Nero? I'll try and type it in. Hang on. RHIN METALL, isn't it? I think TALL. Here we go. Rheinmetall. What do we go on here? We want the Euro TLX. Let's have a look. Oh, it looks very, very strong here, actually. What I should do is let's have a look to see. 4RHM is the ticker, isn't it? Let's see if we get it up on this one quickly. Okay, of course, because it's on that. Just seeing if we've got any more data on these ones. Yeah, here we go. This thing's just an absolute animal. I'm not familiar with the stock myself, but I tell you what I would do with a stock like this. Anything that's trending this aggressively, thanks, buddy. Yeah, RHM. Hopefully, this is the one. If it's not, let me know, mate. Like I said, I'm not really familiar with this stock myself. But I tell you what I would do is there's two things I would use here. I would put a moving average forecast on it, SMA or EMA. I favour the 20, the 50, and the 100. But I do also have the 200 as well, SMA and EMA. All right, but we'll use the SMA for this. Now, this is just the dream scenario with any stock. If it's above all of these and it's fanning out, then you just want to stay bullish until it really starts to break down. All right. What you want to see when you're trading moving averages like this, you want to see them fanning out and all pointing in the same direction. Now, obviously, the longer moving averages take longer to move back down. So we're kind of using the 20 to gauge here. So when the 20 starts to flatten out, we go a little bit thingy. And then as it starts to curve down, we show caution. All right. What we really want to see from this is for it to continue up. Yeah, and either steepen or at least keep. The nature of that, you can see very clearly here what happened. Just take this off the screen just for a moment, right? So we can see we're in a beautiful uptrend here. Yeah, moving averages, look from about this point on, how it starts to move, they're all pointing up. Look for the consolidations, the breakouts, trade it. Consolidation, breakout, trade it. All right, also a really good thing to bring in here. You got the CBD on here. Let's remove that. Right, that in our volume suite. Yeah, what you want to look for here as well is just a rising bit of volume. So consolidation, which you'll notice is this candle here, and then hopefully you guys can see this, but these candles that follow, this is the first candle, rising volume on the second candle. 1, 2, confirms the breakout, in we go. Yeah. So then as we come up, one thing I say is look how price then engages, but fails to bounce directly off the 20. Then notice how it kind of gets back underneath it. The 20 period starts to just flatten off a little bit. Yeah. What we then want to do is you just want to be patient. You get the breakout above, but look at the 20. 20 is still a little bit flat here. Still a little bit flat. Comes back to it. Still flat. Now it's starting to curve. Now it's starting to curve. See how it starts to wobble through here. We're just staying patient. These are still in good order. This is just a correction. Now we have this beautiful big high volume candle. See this? See how it's double the size of all these others? And if you can really zoom in, look how the moving average has started to tick up here. Yeah, that's when you're stepping back in and saying, okay, this is when you wait for the consolidation. Here's your bullish breakout candles, 1 and 2. Yeah, and you're just following it up in that fashion. It's a really, really good way to trade these, especially from a bias perspective. Now, I know this is on a very high time frame, so depending on what kind of time frame trader you are, you can also drop this down onto, say, a daily chart. And you can see the daily chart has the same principles, right? Look how this has kind of helped us out. All a bit flat through here, but look how it starts to tick up. Yeah. Corrective move here, rising volume, and you're basically just riding these up. As it starts to flatten out, we want to just show a bit of caution. This isn't the worst spot actually here. I think this is okay. Volume's dying down a little bit here, but it could be correcting back down. This tried to curve back over again here, but was bought up quite nicely. So I really like that. Now, how I would trade this on the lower time frames for anybody interested is I would move away from this. Yeah. And let's just say, for example, you wanted to trade this on, I mean, anything, 15-minute, 5-minute, etc. I'm now going to move the 9, the 20, and I'm going to leave the 200 on as well. See how these are a lot closer? For me, I focus on intraday trading, right? But I know a lot of people here probably don't. So you can forget about the session breaks on here. Let me just turn them off. It's really weird. Session breaks was up here. Now it's down here. Interesting. Okay. So rules are, we're bullish. We know we're bullish, but we need to be above the 200 moving average. Yeah. And we need both of these to be ticking up nice and high. Yeah. And depends what kind of time frame trader you are. But again, what we're looking for here is for price to correct, us to have rising volume. So here's the corrective move. If it helps you, you can always draw a little line through here as well. And you can say, here's the corrective move. Well, here's the breakout, candle 1, candle 2. Do they have rising volume? Yes, they do. Candle 1 and candle 2 coming off lowering sell volume. So this sell candle here is lower than this one, or bar, then rising buy volume. This is where we can enter, right? So there's the entry candle. You can target the prior low, or the prior low, or even the price swing low if you want to. Totally up to you. Ultimately, then you're looking for price to move higher. Yeah. One of the great things about a system like this is quite often the volume is your best friend, because you notice this. Just going to get rid of this for a second. You notice we had the corrective move here, but then these are the following on candles, lower volume. So it warns us to stay out of this one. Versus corrective move, price back above the 200, 1, 2 rising candles here, allows us to step in here. Price below the prior low, or again, you could drag it all the way down to the swing low if you wanted to, or use the MAs for protection. And then we're looking to trade it to the highs. Now, it only works a system like this, as you'll notice as we move forward. You have to be above if we're bullish, and we're bullish on the high time frame. Yeah. So we have to be above the 200. And things like this, I'm not so interested in. Right. I'll tell you for why. Look at how messy the candles are. The candles are kind of very indecisive here. But also look how messy the moving averages are. Notice how it looks a little bit like the top of a choppy lake. Yeah. Versus this. Look how it starts to smooth out here. Yeah, and they start to widen. You're not seeing as much of this choppiness. So as price comes into areas like this, rising volume breakouts, rising volume breakouts, rising volume breakouts, and we're ultimately just, this is the dream here, really, when you get a trend that's this strong, until it starts flattening out again. All right. I find this was one of my most successful when I was trading stocks, a lot more than I do now, right? And also with some FX pairs. But the key thing here, we have to have a trending market. And the reason that it just came to mind here is because obviously, when we look at this stock, the thing is just going absolutely parabolic. So again, I'd look at this on, say, a weekly or a daily scale. I don't know what kind of time frame you're investing on this on, but looking for these moving averages to keep us honest. For any members over at the Bird Nest as well, I do these because these are obviously free, but if you are on a membership with us, you can also use BPro. And BPro does all of this for you anyway. What was it? RHM. Let me just pop it on this one quickly because I've got my full settings on this one. So we can utilize our trailer system. We can utilize our moving average. And what you'll notice of this is the BPro caught the bottom here perfectly, right? So the whole plan with this system is, if you're under see this thicker line here, the flatter line, this is what's known as the trailer. If you're bearish, and this is obviously on a weekly time frame, then you'll notice that the line goes black until we get a confirmed breakout. And then you'll notice that we recover the baseline here, which is a smart moving average. We get the divergence confirmed, which takes it from 11, I believe, different oscillators and then works it out as a percentage. And then what you're looking for ideally here is to be under a bearish trailer, which it just is there, under the bearish moving average, reclaim both as we do here, ideally off the back of a divergence. Normally means people are trapped or the indicators are disagreeing. You can then bring your volume in, your beautiful rising volume through here, and ultimately BPro kept you in this trend. Well, the trailer never flipped bearish. It did for that one candle and then recovered it here. So you would have been flat through this consolidation, right? But we're trying to achieve a similar thing with moving averages as well. And obviously you can move this onto lower time frames to have that as your confirmation too. Awesome. So yeah, sorry, I did want to show you that. Again, I'm not really somebody to shill stuff on the show. I probably should a bit more. But if you are interested in the memberships, etc., you can find them in the description of the video. And like I say, all members get access to that indicator. It used to be $100 a month. Algo. Let's finish on Algo, shall we, for our good friend? Notice how as soon as you put the Algo chart on, unlike that one on the Ryan and Tool, you can't see any trending. It's just kind of chopping around, if anything. Still in a little bit of a downtrend. But what I do like about this with Algo, again, kind of coming into this key area for me of resistance, but we didn't really see many convincing closes above this level here, until we did here. Big body close, and then look how this line was retested. Also, this area and price moved up. That is exactly what I'm looking for on Algorand. A really special shout out to my good friend Chris, Crypto Assessor, who is one of my wonderful fundamental analysts over at the Bird Nest. Just had us all absolutely balls deep in Algo. Back here. He was just like, just stop mincing about and just buy more Algo here as well. Recently pumped it again. So I always have a smile on my face thinking of Chris and his love for Algo. But also how well my Algo holdings are doing. So I have to be a big thanks to him there. So again, I'm looking for price to have a convincing close above this level on a weekly scale. Now, that's not a lot for most people. I know most people are wanting to action before that. So on a daily front, if we put... we can't, sorry, because we're on the crypto charts. But I would look for kind of on the CVD here as well as volume to just see if we're getting as much absorption as this shows from the highs on a daily basis. Not massively concerned with that because as long as we confirm this gap here, this gives me a key condition from which to look for long setups. Okay, so that's something that I'm going to be looking for through here. With the recent price action here as well, you could apply like a moving average strategy to this as well. All right, just remember it's a little bit more volatility with crypto. But again, often after these large expansions, we do get price come back. If we continue and we close above these levels here, then I would want to see this area retested at 0.27379, just as a very quick and final point. Looking at this here, if this does hold, and it looks to be, I mean, it's funny, isn't it? Because you move from like the daily, doesn't look like it gives you much information, and all of a sudden on the 4 hour, it looks to currently be performing basically the perfect retest here. Nice reaction at this straight away. And look, this area of interest actually crosses over a beautiful 4 hour bullish gap. So Yeah, I'm bullish this instrument here. I have to say, this looks really nice, large expansion. We always need to be a little bit careful longing when we're very high up in a move. But in all truth, I think, I think this is quite a good place for algo to look for longs. If I was looking for long setups here, by the way, I would want to see some kind of confirmation, and that would come in a form similar to what it looks like it's doing here, right? I would look for a sweep of a low to show that we've got inducement. The key thing for me, it has to be happening at a key level. It's happening at this consolidation that led to this massive expansion. It's happening within a higher time frame bullish gap, yeah, and a 4-hour gap, and it's happening at this key pivot level, like literally exactly at it. So for confirmation setups in crypto, what I'm looking for is this: one of two things. I need to see a liquidity sweep, which we have. I am then looking for price to close above. Yeah. It's an interesting one here, really, because we kind of have the up close candles here that closed below. So we're kind of setting a breaker line setup as we speak. Yeah. Price is closed above here. Now, what I would normally do is place a limit order on here and look to chase this higher. The issue that I have is we're very close to the pre-market open here, so this could either run very hot or correct deeper. Either way, if it hits my triggers, I accept the risk. If I'm in, I'm in. If I'm out, I'm out. So I do think that this looks like a nice setup. All right, like I say, the caveat for me here is that I don't like the fact we're just about to have pre-markets. I'll probably give that a little longer. The other option for a setup here is this. We've got the sweep. Now I want to see good expansion from here. So for this to be a decent sized bullish candle. And the most important thing then is that we leave a bullish gap here, right? Because then the whole point would be we get the expansion, we get the bullish gap, we enter on the bullish gap, we trade it higher, and our risk is below this low. Just the market maybe tipping its hat to us a little bit that it's ready to go. But like I say, I think it really, really looks good there. Gibraltar Master. So good idea would be to wait for it to close above the line. Okay, so on a daily scale, right? I would say there's a risk here because unless we get the close above it, and again, not just a close, I'd want to see a little bit more body close above here, right? But any close above this line, we're still in a kind of area of resistance. But I would then, consider it acceptable to look for pullbacks to long on the lower time frames. All right. With the 4-hour, it excuse me, it gives us a little bit more granularity throughout the day. Because unless you're intraday or short-term trading this, then you're not going to be taking setups from here. Now, what you want to see is this 4-hour gap hold, because what it's telling us is it's respecting these key areas. It's respecting the areas of demand, moving away, creating the gaps, respecting the gaps, moving away. As long as that continues, it's rinse and repeat, right? Price comes into the bullish gap, we're bullish on the high time frame, we look for longs. Price comes into an area of support, we're bullish the high time frame, we look for longs. Price violates those areas of support or violates those gaps, we look for those areas to be confirmed as resistance, and then we either short-term, intraday trade them to lower levels, where we then look for longs, right? Or we wait patiently for price to correct and find, fair value a little bit lower. But yeah, looking at this line here, right, 0.27379, I think is a decent level. Price seems to be holding it at the moment. I think if we lose this level here, we can purge down deeper into these higher time frame gaps. But if the equity markets behave, let's take a very quick look at those. Yeah, they're up already, about 1/10 of 1%, something like that. So they're moving in the right direction, but that could just be for the pre-market, which happens in 11 minutes. So do keep an eye on those guys. And remember, do trade safe. We've got a lot of news events coming up this week. I will try and be as active as possible on Twitter, all right, for you guys to keep you updated with anything that comes in. Obviously, members have access to me daily anyway, as well as the rest of the trading team. So I hope to see a load of you on there. Live trading will commence again tomorrow, all right? And apart from that, I'll be live with you all again on Wednesday, so we can take a look how some of these trades played out or didn't play out. I'll explain to you which ones we took. And we're also going to be covering a few new interesting assets for you as well that have caught the attention of our fundamental team. Remember, Wednesday is our alt request show as well. You can come in with cryptocurrency, traditional market stocks, FX, whatever you fancy. Let me know and we will chart it on the show. All right, everyone, just over 3,500 of you live today. So thanks and blessings to every single one of you. I really do appreciate you all from every corner of the world trading in and logging in to this show and listening to me rattle on. So be good to one another, and I'll catch you all on Wednesday. Take care, legends.